Welcome. In this video, where will ZBCN coin turn upwards? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Another notable structure on the chart is a strong bullish order block pattern positioned just below the price. In technical analysis, these patterns, which are particularly popular among institutional traders and professionals who want to follow the tracks of large investors, often generate signals that are highly effective in determining the future direction of the price. Order blocks are areas in certain parts of the market where large players execute significant buy or sell trades and create liquidity. In this context, this bullish order block on the chart, just below the price, can be considered as a potential support zone where buyers are building a strong line of defense. The significance of this level is not only based on a technical nature, it is also an important indicator of market psychology. This is because the areas where such order blocks are located have usually seen high volumes of buying before, and serious reactionary movements have started from these areas. Therefore, given the current price action, there is a strong possibility that if the price approaches or touches this bullish order block, there will be an upside reaction. This reaction may be in the form of a sudden bounce in the short term, or it may be the beginning of a permanent uptrend in the medium to long term. In areas where order blocks work, the supply-demand balance usually favors buyers. This means that when the price hits these levels, it can find support and regain upward momentum. Especially in areas where bullish order blocks are in place, buyers who want to re-enter the market come into play, putting upward pressure on the price. A similar scenario may be playing out right now. As the price moves closer to the bull order block, buying pressure may increase as traders see this area as an opportunity and turn to buy positions. This could lead to stronger and higher volumes. In addition, such structures are often levels where institutional traders have been active in the past. In other words, there may have been a significant accumulation of institutional liquidity in this order block before. The desire of these institutions to protect and defend their positions may create buying pressure again when the price reaches these levels. As a natural consequence, once the price reaches this area, it may suddenly bounce upwards and move towards the resistance levels. It is important to note that not only technical, but also deep liquidity structures are behind this move. In scenarios where a bullish order block is in operation, the price usually leaves a wick after touching this zone and starts its upward movement with a strong green candle. This gives the trader a clear visual and technical signal. Such moments can be very attractive, especially for traders looking for lows to enter positions, because positions taken in these areas offer the potential for low risk, high return. Stop-loss levels can be clearly defined, and the potential profit can be quite satisfying. When the current chart structure is analyzed, the fact that the price is close to the bull order block is also an indication that the market is in a decision phase. If there is a strong buying reaction from this area, this would restore investor confidence, and the market may experience an upward psychological breakout. After this break, resistance levels may be tested, and even previously impassable barriers may be breached. This could pave the way for new highs. In technical analysis, the operation of such critical support areas is often considered as breakpoints that determine the direction of the trend. The operation of such bullish order blocks also indicates the end of artificial declines in the market and the return of real buying power. This is a very positive development, especially for trend-following traders, because buying at the bottom of the trend is one of the most desirable situations in the investment world. In this way, both risk is minimized and maximum profit can be achieved. But we cannot decide the analysis only with the order block. Let's look at other metrics. Stay tuned. Looking at the current structure on the chart in reverse, that is, from an alternative perspective as opposed to straight logic, we see a very interesting and remarkable pattern that resembles the reversal structure of the Elliott wave theory. From this perspective, the price is currently moving inside the third wave pattern. This third wave is of great importance both in terms of momentum and the breaking point of market psychology. The third wave usually represents the strongest and most pronounced part of the trend, and it is one of the periods when the price makes the strongest jumps that attract the most attention from traders. However, this is not a classic ascending five-wave structure. On the contrary, we are approaching the Elliott wave system in reverse, in terms of potential corrective waves or expanding corrective structures. This backwards reading is particularly critical in the late stages of falling markets or near the end of a correction. In reverse, this move, which we interpret as a third wave, may indicate that we are at the midpoint of a trend that is beginning to signal a reversal. And this gives us a very promising picture. This analysis, especially supported by Fibonacci levels, becomes even more powerful. Looking at the current price action, we can see that there is a trend towards the 1,618 Fibonacci extension level. This is a very specific and carefully monitored area in technical analysis. The 1,618 level is known not only in Elliott wave analysis, but also in general technical analysis principles as an area where the trend matures and a change of direction is possible. This level is also referred to as the golden ratio and is a turning point that manifests itself again and again in financial markets, as in many structures in nature. Therefore, if the price reaches this 1,618 level and signals indecision, weakness, or a reversal at this level, it could be a very positive development. This means a window of opportunity for investors, because prices often pause at this level, consolidate a bit, and then either change direction with a strong reaction, or continue their current direction with a weaker momentum. In this case, when the third wave of the Elliott structure, interpreted in reverse, reaches the 1,618 level, the price is likely to establish a floor here and then make a strong upside recovery move. According to Elliott wave theory, the third wave is usually the longest and most voluminous. In reverse, this wave could mean that the trend has matured and is preparing for a reversal. At the end of the third wave, the market is considered to have reached saturation and it is time for a change of direction. If this analysis is correct and the price is indeed now inside the third wave, then what can be expected is either a reaction rally directly in the direction of the fifth wave or a corrective rebound to earlier levels. In both scenarios, the possibility of the price moving upwards is technically supported. In the current chart structure, the fact that the price is approaching the 1,618 level quite smoothly and starts to react when it touches this point gives strong signals that the upward movement may begin. Wicks, candle closures, support resistance conversions, and other momentum indicators should be carefully monitored once this level is reached. The first upside moves from this level could push the price higher, indicating that large investors are starting to take positions. Moreover, this analysis is of great importance, not only for short-term traders but also for medium and long-term investors, because such reversals usually signal a new uptrend. In scenarios where the price reverses from a critical level like 1,618 and then starts to rise, the trend often becomes more long-lasting. This means the potential for high returns for investors. Such opportunities are not frequent in the market. Therefore, these areas should be carefully monitored, and the necessary strategic steps should be taken in a timely manner. The MACD indicator is one of the most valuable tools frequently used in technical analysis, effectively showing momentum changes in price movements. Recent observations on the chart show that there is a crossover between the MACD lines from top to bottom. Such crossovers usually indicate temporary pullbacks or resting phases of the market. However, this does not necessarily mean that it will turn into a long-term negative pattern. On the contrary, in many cases such movements can be interpreted as periods when the market is gathering strength, accumulating energy, and laying the groundwork for a new upward move. This upside-down crossover in the MACD actually indicates that the market is taking a breather for a while, moving from the overbought zone towards equilibrium and making the necessary technical corrections so that the price can move on with a healthier structure. MACD lines are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.